Hello and welcome to CrypTalk. I'm Ross Sinclair for BizNews.com, and I'm speaking to Gaurav Nair of Jaltech. Please keep in mind that nothing discussed should be taken as financial advice, and please speak to your financial advisor. Thank you for taking the time, Gaurav.
Sure. Thanks for having me, Ross.
So the Ethereum merge happened 2 weeks ago, and we've seen the results, and they've been somewhat underwhelming. So while the prices have gone down a little bit, it hasn't tanked and it hasn't shot through the roof. So, what are your opinions on the long-term outcomes of the merge now that we've seen such a huge change in the technology?
Well, I think it's probably a good idea to have a quick recap on what happened. So, Ethereum used to work like most other blockchains and like how Bitcoin works, where in order to run the blockchain, it used to use this very energy intensive process called mining. And last week, or it's just yeah, it's about last week, 2 weeks ago, sorry. Ethereum changed the way it works, and instead of using mining, it uses another method called proof of stake. And this was in the works for a couple of years, um, planning that extended even before that. And it was actually quite the feat because they changed the way the blockchain works at a very fundamental level without it ever going down. And the analogy often used is that they changed the engine of a plane while it was in flight. And the merge went unbelievably well. Um, Coming into the merge, there had been lots of test merges, and with all of these test merges, there had been actually numerous issues. There'd been all the different software that runs to make the blockchain run. Sometimes it wouldn't agree with each other. There'd be settings issues, etc. And the actual merge, with billions of dollars of value on the blockchain at risk and a lot more activity on the Ethereum blockchain, um, went extremely smoothly with none of these issues. Um, and so yeah, and a lot of the developers who made this happen were surprised at how well it went. Um, yeah, so I guess given that, a lot of people have been surprised about the fact that the price actually dropped a bit. Um, and going into the merge, by changing over from mining to proof of stake, the supply of new ether coming into the market has dropped by more than 90%. And so it seemed like this would be something positive for the price. It's now environmentally friendly. There's a lot less supply coming onto the market. The price should have gone up. Um, However, what could have happened is that a lot of people might have expecting this might have actually pumped up the price beforehand, and then after the merge, when the price didn't skyrocket, then those people sold, and the price actually dropped a little bit. But these fundamental points about it being more environmentally friendly, less supply coming on the market, because it's more environmentally friendly, potentially institutions might be willing to come in, some that were waiting on the sidelines. That's probably still likely to play out in the long run. And so some of the people going into the merge predicted that we would see increasing ether price, but over the long run.
Mm. So is it market skepticism right now, and we'll see the benefits when the markets turn around? Because obviously everything's down. The Nasdaq, the S&P keep falling. So does most. I think Bitcoin for the first time in a week went over $20,000, but it's back down. So do you think that's going to turn around when the markets turn around?
Exactly. There's often a saying I've been hearing more and more, which is that you can't beat the Fed. So even if there's something that's good news for an asset or the market, but the Federal Reserve in the US is raising interest rates to fight inflation, uh, it sees most asset prices dropping, especially risky assets like tech stocks, and crypto is considered, even riskier than that. Um, so even though this is fundamentally good news for Ether, the macro environment hasn't been good at all.
So now that we've seen the adaptability of this blockchain, what does it mean for other blockchains and the environment as a whole?
Yeah, so especially given that uh, the Ethereum chain, which is the busiest chain, so by some measures it's the biggest chain. It isn't the biggest by market capitalization, which Bitcoin still is, but it's the biggest in a variety of other metrics. It managed to do this change without any issues. Um, This will probably serve as an example for other chains. One of the core, the main developers behind another chain called Zcash or Zcash. It's a chain that's very private, so people can't see your transactions. Um, the developer said that they also wanted to move over to proof of stake, but they were waiting to see what happened with Ethereum. So, given now that this has gone successfully, it'll probably be the case that other chains, Zcash included, will probably change over. Um, Probably not Bitcoin for now. A lot of the Bitcoin community is still skeptical of this new method, proof of stake. So they'll probably wait to see what happens. Um, and so there's probably not enough will to change in the Bitcoin community. But however, pressure may mount. Regulators, seeing how this went so successfully, they may actually require blockchains that are used in their jurisdictions to change over. And what will this result in? Will this result in chains actually changing over or not? We'll see as events play out.
Has the merge helped with crypto adoption at all?
Again, it's probably too soon for that to be the case. What the merge did do is it was often the headline article at the time in some of the biggest publications. And so I think it brought crypto back into the public awareness. And I think for a number of people who aren't close to crypto, it made them realize that there is a way to run these blockchains without using these very energy intensive methods. A lot of the objections to crypto was that, yes, it has all these great use cases, but it's not friendly to our climate. And so now there's an alternative way to do that, to still use blockchain technology while not wasting energy. So I think from the point of view of changing the narrative around crypto, etc., it probably did do a lot. And it, in the long run, will definitely assist with institutional adoption, given that many institutions just can't invest in things that are environmentally unfriendly. So now it brings at least the Ethereum chain on the radar for them.
So speaking of objections, what else would people in the crypto industry have to do to get mass adoption?
Yeah, so I guess it's often said that one of the main reasons that adoption is slow in the crypto industry, well, I suppose the first thing is to consider, is it actually slow? Um, and what we've seen is that the adoption of crypto has actually been one of the fastest adoption rates. And there's a nice graph which has been circulating around quite a bit, which shows the adoption of various technologies over the last 100 years, from refrigeration and color TV, etc. And it goes from 0% up to 100%. You see these slopes. And when it comes to crypto, it has a very, very steep slope. And of course, that's because crypto has the internet to spread its adoption, whereas refrigeration didn't. So the adoption has actually been extremely fast. But the question is, what are the impediments to further adoption? And one of the objections is that crypto is a solution looking for a problem, or blockchain technology. Well, this isn't strictly true. There are many people in emerging countries who use cryptocurrencies to opt out of their financial system because governments are printing a lot of money, or inflation is out of control, etc. And so it does have a use case. And interestingly, when you look at the penetration of crypto ranked by country, most of the countries that are the most penetrated by crypto are actually emerging markets. And secondly, people use crypto to as a payment system for international payments. In many cases, it's faster and cheaper than the SWIFT network. However, I think that when people object to use cases, it's because crypto seems to hold a lot of promise. And people are asking, well, when is the rest of this promise going to be delivered? And while it does hold a lot of promise, I believe that most of the use cases are going to be figured out in the future. If we compare it to something like the internet, in the 90s, the internet also held a lot of promise. But if you asked the venture capital firms back then, what's the internet going to do? They would not have been able to predict what it actually ended up doing over the last 30 years. So fundamentally, crypto has some great properties. It has this ability to have these smart contracts that execute automatically. It's called programmable money. You can just imagine a bunch of uses there. It's a system that's totally transparent. Again, there's some uses there. You can imagine a scenario where lenders know exactly what a borrower's balance sheet looks like. They can see it on a blockchain. It doesn't involve any trust, et cetera, et cetera. So there's a numerous list of properties it brings. And so you can imagine a lot of use cases then that would want to make use of those properties.
So if we compare, the internet in the 90s and what it is now, what do you think is the timeline for crypto to reach that sort of point that the internet's come to?
Yeah. So, well, if we look at that timeline, and that's been when the internet first started it was even longer before that, right? The internet was being used by universities, etc., even before that. So the internet as an invention is probably about 50 years old, but about 30 years available for commercial use. And so when it comes to crypto adoption, it's only about 12 to 13 years old. Um, and so it's likely that those timelines will be much shorter. I don't think we need to wait another 18 years to get the kind of use cases and adoption that the internet has today. It'll probably be on a shorter time scale of 5 to 10 years. And again, the comparison to the internet is really good because if we remember using the internet in the 90s, it was really actually user unfriendly. If you remember the dial-up modems and just setting up a connection when you did it the first time, you had to fill in ports and you were on the phone with the various ISPs for hours.
And it screamed at you when you didn't listen properly.
Exactly right. So crypto is kind of in that stage now where it requires quite a bit of user knowledge to use it properly. However, the main things that the venture capitalists and new firms are working on is actually putting all of that into the background. That the front end is very user friendly, and all of that's the finicky settings, etc., is dealt with in the background. So you get all of these nice properties without needing to be an expert in cryptocurrency.
There were expectations for cryptocurrencies to take power from the government and banks and create a sort of a libertarian economy. Has it obviously hasn't happened yet, but is it on course to happen, or are we looking like it's going to have completely different adoptions than what people thought?
Yeah, so I suppose it'll be a bit of both, but we'll have to see how this plays out. There's definitely when we're dealing with crypto compared to, let's say, the internet and blockchain technology, the one thing we're dealing with is that blockchain technology is disrupting money. And so there are huge vested interests that have a lot to lose. And some of them might fight the change, and some of them might, in fact, get on board with the change. And we'll have to see how those kind of powers play out. And of course, governments themselves, they don't want to have less power. Even in the most benevolent case, governments need power to achieve their policy objectives, whether it's reducing poverty or delivering healthcare or whatever it is. So it may or may not actually play out. But what we see internationally, from a geopolitical point of view, is that the US runs the financial system. SWIFT is a US company, and when the US imposes sanctions on countries, sometimes unilaterally, they lock them out of the SWIFT system, which settles international trades. And that really hampers a country's ability to trade with the rest of the world. And so what a lot of thinkers and analysts in the space are saying is that cryptos, since it is very difficult to control, it's decentralized, it's probably going to be a credibly neutral alternative to these systems that can be controlled by various states. China it's been said that China is trying to start a digital yuan as their currency, as an alternative to the dollar. But it's unlikely that countries will opt out of the dollar and just be dependent on China instead. So they'd rather probably use something that's neutral, that they know that neither China nor the US can control. Either something like Bitcoin, or probably more likely something like Ethereum, because Bitcoin's functionality is only to settle Bitcoin, but Ethereum has more sophisticated functionality.
So you've mentioned some of the points, but if you look purely at the technology of cryptocurrencies and ignore any greater fool's theory that Warren Buffett says is the only thing that crypto has, that you can sell it to some moron later for more than you bought it for. If you look purely at the technology, the fundamentals, why should people invest in crypto?
Yeah, so I think that the when it comes to cryptocurrency, there's numerous use cases to it. As we described before, some of them uh, are yet to be discovered, but a lot of them have already been discovered. Um, and so it's about fundamentally believing in the technology. Um, Now, when it comes to a lot of people, when they look at cryptocurrency and they see that it's so volatile, they're kind of confused about this. Does it mean the fundamentals of the technology and its promise are changing that often? Um, and again, a comparison with the internet is a really good comparison, um, because when you compare it to the internet, most of the early internet companies, they went to zero. They ended up going bust, and numerous of them, including the likes of Amazon, that on the way to becoming some of the biggest companies in the world today, they had numerous times where they dropped 90%. They had huge drawdowns. And this speaks to potentially taking a more diversified approach than trying to pick single winners. The other thing is that a lot of the internet companies, we couldn't actually see their value when they were still in the early stages. That's because they were held by venture capitalists. They weren't listed. Only once they became quite large companies did these venture capitalists list them. When it comes to cryptocurrencies, often as a team is building something, they can list a token, and it's at the very early stage. It's like investing in Google when it was only 10 employees. And if Google had been listed then, it could be the case that we would have seen extreme volatility in the likes of how we see with cryptocurrencies. Um, so other than the technology side, one of the other things that people find to be quite compelling about cryptocurrency and Bitcoin specifically is that it serves as an inflation hedge. Now, this narrative has been questioned lately because as inflation has increased, Bitcoin's actually dropped. And that kind of speaks to a couple of things. The one thing is that Bitcoin is still seen as a high risk asset, and we already described about the Federal Reserve, etc. And so when the interest rates go up and people get out of risky assets, cryptocurrency suffers for that reason. But one can actually differentiate between two types of inflation. So the one type of inflation is inflation driven by spending, and that is what we're currently looking at. And that's because of COVID and the stimulus that government gave to a lot of people, and then people have been spending that money, as well as other supply-driven issues, with the war in Ukraine, etc. However, what Bitcoin is seen to be more likely to protect against is something called asset price inflation. And this is the type of inflation that's actually been going on for many years, where money is very cheap, and really financial institutions can access this cheap money, not so much individuals. They can borrow money very cheaply. And so what they end up doing is they end up buying assets, and the price of assets climbs and climbs and climbs. And this explains kind of the multi-year run-up in asset prices. And so this is the kind of thing that Bitcoin protects against, because when you look at the Bitcoin price versus the amount of money in circulation, then actually you see an obviously very volatile, but an increasing line. So that's one of the narratives that actually provides an inflation hedge. Another narrative, which is kind of closely linked, is around abuse of the monetary system. So this is where, and this is something which people are speculating is going to happen more now, with interest rates going up, governments finding themselves in debt, they find it difficult to pay back that debt. As interest rates go up, it becomes more and more expensive. And so one way of getting rid of the debt really is to inflate it away. As inflation goes up, the interest rate stays the same on a lot of this debt, and paying it back in real terms becomes much cheaper. And this is often how countries deal with debt. That's just they have no other way of paying back. Again, this kind of inflation, Bitcoin should protect against. And so these are some of the reasons why people may want to invest in Bitcoin. And then I suppose finally, there is the idea of having an asset that is resistant to seizure by the government. So I guess people have different views on how much of a risk is this really, that the government is going to start seizing personal assets. It has happened in the past, in the US at
Well,
one
we've seen
point
it
under,
now. It's
yeah,
there's a few social media people who are controversial who've had their assets, their bank accounts are completely frozen. Russian oligarchs. So I suppose it's very real.
exactly, very real. And it even happened in the US under FDR when he was president. At one point, he implemented that no one could own gold, and all gold was bought out from private citizens. So I guess it's difficult to quantify the risk until it happens. And so for a lot of people, it's really important for them to have a seizure-resistant asset. And cryptocurrencies are in fact that. However, it requires you to take the cryptocurrency yourself and have it in your own custody. If it's sitting on an exchange and the government changes the laws and tells the exchange, give us the cryptocurrency, we're going to give you dollars, um, the exchange is probably going to comply. They're not going to send their directors to jail. So it requires you to actually have custody of your own cryptocurrency in order to benefit from that.
Well, speaking of exchanges, the Celsius CEO Alex Mashinsky stepped down yesterday, I believe, after the company went bankrupt. Now, there's quite a lot of controversy here because he and his wife were selling T-shirts that said "Unbankrupt yourself." Uh, After having lost people millions, lots of people lost their life savings. They couldn't withdraw after the company went down, so it's quite insensitive. But it was a play on words of their old slogan, "Unbank yourself." But now the Sam Bankman-Fried, the CEO of FTX, is looking to snatch up Celsius for its assets. What could he do with these assets?
Well, I suppose on the one hand, by taking over these assets, there's the hope that he'll get these assets at a bit of a discount. However, there's been a bit of speculation that there's something else at play here. Um, Sam Bankman-Fried also, through FTX, recently acquired Voyager's assets, which is another kind of crypto bank that went bankrupt, that had promised to pay high interest rates to depositors and had lost some of their money, and now can't pay back the depositors. And some of the speculation has been that this is a genius move by Sam Bankman-Fried, because uh, what they would get is they would actually also get all of the customers of these two entities. And so this could be a way to acquire customers quite cheaply, uh, while also being seen in a very positive light as someone who stepped in to save some of these assets and these companies, etc., and try and pay back some of the creditors a portion of what they've lost. At the same time, they acquire customers quite cheaply, and then try and convert those customers into FTX customers, and then enjoy revenue from them, hopefully for a good period of time.
Would FTX have to pay back the debt that Celsius owes its customers?
So it depends on what exactly the terms of that are. I mean, bankruptcy law is quite complicated, so I can't claim to be an expert there. But typically, the creditors, they have the right to those assets. And so often when someone tries to bid for these assets, they also put in some offer of how they're going to partially settle the creditors in order for the creditors to give up that right to those assets. So I guess it's a bit involved, and I'm not sure what the actual terms will be.
So FTX also tried to buy Robinhood, their major sponsors in F1, and they're currently, I think, the second largest crypto trading platform by volume. Who do you think are going to be the big players and the leaders in the future? Is it going to be FTX, Binance, Coinbase? Who do you think?
Exactly. So there are a few firms that have positioned themselves really well, and that's the likes of Binance, FTX, Coinbase, as you mentioned, also Kraken. Um, and they've all taken slightly different strategies. Coinbase has taken the strategy of trying to grow mainly within the US, of following all of the regulatory regime within the US, playing nice with the regulator, and to be the default choice, especially for institutions within the US, who have peace of mind that all the regulatory boxes are ticked. Binance and FTX have taken slightly different strategies, where they have decided to try and grow outside of the US. While they have also have a US presence, their main growth, their main focus has been outside of the US, where it's a bit easier from a regulatory point of view in certain jurisdictions to grow, and there's less risk of getting in trouble with the regulator. And so they've decided to grow in that way. FTX specifically has also been looking at integrating and taking over the normal financial system or the traditional financial system. So they're looking at moving into trading stocks, just old-fashioned shares, etc. So kind of a variety of strategies. And it'll be interesting to see how it all plays out. Which strategy does well for which firm, or are they all going to find different places within the market?
So Do Kwon, the creator of Luna Terra and the founder of Terra Labs, has a warrant out for his arrest from South Korea, his home country, and he's been put on the red notice by Interpol, and they're looking to extradite him from Singapore. So obviously billions were lost in the Luna Terra incident, and people lost their life savings because they put into it. But should Do Kwon be held responsible for this? What happened, and is this right?
Yeah, so this is a developing story, and there's quite a bit of controversy around it. So and quite a few confusing details. So what happened was Do Kwon and Terra, that was a stable coin that they had launched, and the stable coin was algorithmic, meaning that there's a set of programmed rules, and it tries to maintain this cryptocurrency tries to maintain a one-to-one peg with the US dollar, and it grew quite large into the billions of dollars, and then the peg broke and went to zero over the course of a few days, losing billions for a lot of retail savers mainly, and also indirectly led to the crash and the bankruptcy of Voyager and Celsius, amongst others. And so one of the questions is, if one fails in an endeavor, is that actually fraud? And so a lot of people are asking questions around, why is Do Kwon wanted? Was there any kind of fraud? Was there any kind of misrepresentation? And so I guess that remains to be seen if and when he has his day in court. Because I suppose failing at something isn't the same as misrepresenting it. And because a lot of the code is open source, that means that anyone can look at it. All of the transactions are on the blockchain and visible for people to see. It's very difficult to argue that there was fraud. The information's out there for the public to see. So there's some question marks there. Yeah.
He seems very cocky about it. He's tweeting about how he's coding in his living room in Singapore, and he hasn't seen his name on the list, but we'll see what comes. Have you seen any promising uprising projects that are coming into the works at the moment?
Well, they often talk about in the cryptocurrency community a bear market being a building market. And one of the things which crypto is suffering from right now is actually a lack of narratives in that what's next? Now the merge happened successfully, and what's the next thing that's going to hopefully drive prices? However, there's been numerous projects that are very interesting. The most interesting areas for me are something called layer twos. So what layer twos are? They're blockchains. However, what they do is they aggregate a whole bunch of transactions and only post one transaction to another blockchain, like Ethereum. And what that does is it scales the ability to handle a lot of transactions. So that's quite exciting, because right now, if you want to build something on Ethereum, let's say whatever you're building requires thousands and thousands of transactions, it would be too expensive, and Ethereum may not be able to handle that load. However, these layer 2 chains, they can handle much more transactions. They bulk it up into single transactions very, very cheaply, and then they put it onto the Ethereum chain. So that's something that's very promising. And you find all kinds of new cases being built on these layer 2s that could not be built on the Ethereum chain because they were just too expensive to build on the Ethereum chain. And the second thing that's probably the most promising is privacy technology. Now, a lot of people think that if you want to keep your transactions private, that you must be doing something illicit. However, I think all of us like privacy as a default. we wouldn't like everyone to be able to see all of the transactions we do, what we spend our money on, where we go for coffee, etc. It would be too much transparency, and that's exactly how the blockchain is right now. However, there are teams working on technology that allows you to transact with the blockchain without revealing your transactions and your identity. And I think that this is the second most promising thing, because it'll allow the widespread adoption of cryptocurrency and using it as a payment network when combined, especially with layer twos.
Fantastic. Well, if you'd like to learn more about Jaltech and Jaltech's cryptocurrency basket, please click on the link in the description down below. Thank you so much for taking the time, Gaurav.
Thank you, Ross.